Hello, folks. Brandon Chapman with today. It's another Theo Night video for November 22nd, 2021. The bidless beast returned at the close today as Jay Powell is retained and investors looking for their happy place. That's the title of today's video. You look at the to finish the session as we just began to kind of roll over rather quickly, starting around 13:10. Of course, that's Mountain Time, 1:10, 3:10 Eastern, and we finished near the lows of the session as far as the cash close. So we look at the SPY as an example here, as a proxy for trading. You'll see how we finished the session here towards the low of the day. Really interesting as things really started off pretty hot. Things looked like they were aiming higher. If you guys are a member of TheoTrade, Don took a bearish position, contrarian position to the high in the Qs today. Worked out rather well, but the Qs did finish down 1%. The SPY last Friday did see a significant printing, 2.5 million shares last Friday in here. Again, just indicating there's a lot of agreement at the high up here. So the question is, where do we go? The fact we're kind of breaking below these levels, the failure of the Qs to hold the highs, and more importantly, one of the bigger drivers for this rally has been Apple. Apple did fade from the highs of the session today and forming a nice little shooting star. If we start to see follow through on Apple, a lot of the bullish call activity that was really driving things the last several days, even earlier today, if this starts to reverse, it could end up being not very good for the market. Now, again, is this unusual to see the market pull back from highs? No, but here's the reality though, right? We're on a historic run. We saw the pullback here. We've rallied back up again. It makes sense that hopefully we might see something a little bit bigger here in the near term. We look at things like skew, for example, the last 3 days. So last Wednesday, there was a significant amount of put interest on the S&P 500 put options that rolled off the books on the settlement on Wednesday morning. That's been kind of built up to some degree as hedges are being built, puts bought, calls sold, the skew pushing higher to 148. That tells you expect to see a high frequency of small up days with crash potential, right? And as we're entering the holiday season, certainly this is a time historically the market's done fairly well. But October, came and went, and as you look at things, for example, on the SPY, for example, was a pretty bullish month, uncharacteristically so. After a mildly, moderately bearish September, as we look at the VIX today, did the VIX start to spike up? The answer is no. It ended up finishing higher, around 20 intraday, closed around 19, 17. We're not seeing a lot of pressure right now on the VIX. The sell-off, while it didn't create a little higher VIX today, we did see a push towards the high of the session. It was not something that ultimately was bought heavily. So we'll see as we pull back here. Is the market, are institutions generally well hedged? Are they basically going to be able to hold the stock through maybe a retail sell-off? As we look at the VVIX here, which you'll see, this is the volatility of the VIX. We are above 110. We crossed back above it on the 17th. Again, there's some VIX buying going on today, and that's certainly call option buying, and that's certainly happening today. On a bigger trade note, unusual option activity for the SPY. You can always find stuff every day. It's a matter of what do you pull out. Time and sales, I ran a filter here for 1,000 contracts, and you can kind of go through some of this stuff. It might be opening, it might be closing. What got filled at the same time, for example. And notice right here around 11:19. Again, this is Mountain Time. You'll see the 465, 445. Buying the 465, selling the 445. There's a 10,000 contract or plus. So if we zero in here a little bit further, look at the 23 D's expiration. Scroll down between here. It's a 13,000 contract, maybe 600 long put vertical, 465, 445. You might say, well, that's hedging. Absolutely, it's hedging, but it's the timing of the hedge. So again, some hedges coming in today, trying to protect themselves against downside here to 445 on the SPY. That gets you back into this range back here. So again, some trepidation. You don't seamlessly see those trades every single day, but we got it today. On the bond front, so for example, look at TNX. Yields were generally higher in the session. A pretty poor 2-year auction led to some skittishness. You'll see the TNX is up 0.89. TYX is up 0.71. FVX is up 1.07. So in effect, what we got was a flattening of the curve between 5 and 30 years. And as you think about the initial bullishness today, of course, on the docket or on the news, Biden announcing he's going to nominate Jay Powell, that's Chairman Powell, for another term. The man did do yeoman's work last year, pumping $5 trillion, expanding the Fed's balance sheet by nearly $5 trillion, buying corporate bonds for the first time in U.S. Federal Reserve history, expanding his mission, driving inflation. He's done a wonderful job. So why not bring him back for another year? Oh yeah, I forgot about the whole insider trading thing. Well, insider trading or just selling a stock on insider information. But anyway, point being is that he's back, baby, if he gets confirmed by the Senate. And again, expect to see more accommodation. However, the Fed right now is angling towards what? Tightening. And so as you're seeing that the yield curve flatten from 5 to 30, despite the fact we're seeing selling in bonds today, again, it creates this interesting juxtaposition of a flattening curve with rising yields. What it does reflect, though, is an expectation the Fed may start to raise rates, and ultimately it may be a little bit of a misstep because they've painted themselves in a corner by being so accommodative and maintaining such low interest rates for so long. But anyway, that's where the bond side of it is. And of course, the bond side did not like the withdrawal, the tapering that we're experiencing right now in the Treasury bond market. If you look at NLY today, NLY was down minimally, but you kind of back this out here. This product over time goes down. That is what it's made to do. It's been on a great run with the Fed buying mortgage bonds. But as we're tapering, is this a time where risk, potential default, and other factors may start to enter, as well as maybe rising borrowing costs for mortgage bonds? As you think about this and you look at today's trading activity on LA Capital, I think I can. You look at option time and sales, you'll see 10,000 contracts bought of the 21 Jan 22 8 put. Now, it's not that far out of the money, but it's rather significant, right? They were stepping in, buying more puts on NOI, expecting some downside pressure here. And again, as we're looking back over time, $8 would have a breaking support over the last year. So something to watch there for mortgage bond companies that invest in mortgage bonds. A company that's kind of, that is interesting today as we look at EA Sports, for example. If you guys are gamers, I'm not necessarily, but my kids really like EA Sports, for example. They're, Madden, etc., right? But anyway, these stocks were down big today, right? So again, Battlefield 2042 released on Friday. Apparently, it was one of the worst reviewed games in history, dragging down EA. We look at Activision Blizzard, and ATVI. So again, their CEO is about to step down. Again, we're having, we've had downgrades for Activision. Again, these are weekly charts. I guess we should bring it back to the daily. But again, some weakness in this space. And again, as we look at EA as an example here, pushing back towards support. So again, some of those places, those happy spots that people go to when the market starts to sell, maybe some video games, not exactly playing out all that well. And I'm kidding about the market selling that people buy these stocks, but people might go to play, and right now they're not enjoying playing a whole lot. Another happy place is Disney. Disney today, after a couple months ago, reinstating their annual memberships for Walt Disney World. They're pulling it again. Again, after an earnings result was not all that pretty, missing a bit on the Disney Plus subscriptions. People holding out hope, and maybe we're a bit oversold. Maybe we do catch a bid here for a few days. But ultimately, again, more news from Disney. That's not exactly positive in the bigger picture, even though near term it is a bit oversold. Now, talking about oversold companies, we got Pinterest here. Pinterest is interesting in that we've had a lot of bullish option activity over the last few weeks, going back to November 5th, for example. So I track this stuff and post a lot of it, maybe not all of it that's happened here on Pinterest. But you'll notice we finished basically at support again today. As we're looking at the stock, did finish weekly, but again, more option interest stepping in for that 31 December expiration today, 11,000 contracts traded. In fact, 10,001 print bought today at the 64 cents on the 51 strike. So you might want to see some shore up here, maybe even a close above today's high, but we're kind of angling towards 50 to 55 is where the interest was previously in the Jan expiration at the 55 strike. As you'll see, there's 61,000 contracts that have been built up more recently on that expiration here. So again, the market may not cooperate. So look for a bit of a reversal here in Pinterest in the near term to help confirm. While we're talking about video games and stepping away from the gaming systems here, the gaming stocks, maybe we might get a little more shape, which is not a great position for WW International. So we're kind of testing support here. We had a big down day last Thursday, and we're consolidating right now at support. Now, as we look at today's trading activity in WW, we're looking at what? We're looking at some puts being sold, 18 calls in here. In general, again, sometimes when these get sent off as all together, this may reflect that it got filled at the bid. This maybe got filled in between. The point being is that what I would interpret to be a long put vertical, buying the 18, selling the 16 here. So again, some expectation that maybe we break down. Now you could look for some trade below the low, for example, from November 18th to help provide a trigger. Or again, it's a pretty cheap trade, looking for downside to 16. And if you look at the cost here, it was around 55, 60 cents for the trade that got put in there, filled in basically, two prints on the 18 and two prints on the 16. And as we look at the number of contracts here, again, it's a ratio. So not much expectation. Near term, it's going to go below 16. But again, the potential, we may push to 16. That's a $2 spread. Maybe you have a chance to make, $1.35, $1.45 on it. All right, another stock here that looks interesting. This is a bullish potential trade on a stock that's a bit oversold here. Again, IBM did push back and we faded. You might look for the stock to reverse, maybe above today's intraday high. Maybe it's hard to be bullish if the market does pull back, but who knows what the market does have in store in the coming days. You can have a bullish watch list. You can have a bearish watch list. In this case, maybe this is a stock you may want to have in your bullish watch list. You look at the 21 Jan 22, the 125 strike, 4,200 contracts traded, 3,000 today, filled in one print at the ask for $1.40. So again, some indication, and we're not talking about super far out of the money, 125, but that's a decent little chunk if we can push to 125, maybe get back to the post gap high of the gap day here as a projector support. You can see that's about the 61% retracement. We're really kind of settling in here for a day or so. Again, a little higher volume, unusual option activity, something to watch. Again, if we can trade through today's high, that gives you enough confirmation to play it maybe back towards 126, this kind of 125, 126 area. Other stocks in the news. So we're looking at Wells Fargo today. Wells Fargo is really interesting. Stock gaps. We ultimately finished with a spinning top formation, but today's trade produced a rather sizable 16,000 contract trade for 14 April. Now, this expiration happened to be what? 16,000 contracts is greater than the existing 13,999 open interest. What's happening here, we're selling the 3250, we're rolling it up to the 40. Now, again, is this an entirely new trade? No, but it is a roll. And this roll happened in a rather timely position towards the end of today's trade, just as things were kind of heating up here on the bearish end. You'll see 1330. We align this with the time over here. And you notice, when did this kind of kick in here? Right towards the high right there. Saw a bit of a spike in volume as well. Nice little down candle on that roll. What are they doing? They're just rolling it up to a higher strike price to be more connected with WFC. So interesting trade there in WFC. Another trade, this is on the bullish side, is Ford. Ford finished rather decently today in terms of appreciation. Looks like we may be breaking out of a pennant pattern here. And this is one that it's just put in a position where, man, infrastructure, the push for EVs, the company focusing on trucks especially, is that enough to keep this train going or this car rolling? Maybe so. Again, that's a breakout from pennant formation today. We did see higher volume as well. But again, what we saw today though, in trade on this particular one, you'll notice there's a bunch of 5,000s in here. You look at what filled at a particular time. So we're going to, kind of group those together, 110614. What you'll see is that the 17Ds kind of stands out here. That one was sold. So we look in here, 17 December, and what strike we focusing on here? The 17 December 22. Sorry about that. 17 December 22. What you'll see is that the 26,000 contracts traded were less than the 29,000. Probably largely closing activity, and some of it may be rolled, right? In this case, 5,000 contracts likely rolled to the 21 and a half, 110614, to the 21 and a half, 20 and a half call spread. So in essence, what's happening here, we're basically rolling this down, but making it a spread, and this net actually was a credit of about 10 cents. So we're taking a little something out of it. They're rolling it down to be more connected, but cutting off the upside potential and focusing on shorter dated nature of things. So 21 and a half. So maybe we got some near-term potential here to 21 and a half. But again, you might look for a little follow through tomorrow as if things start to sell more broadly, maybe forward starts to participate. Although it didn't participate all that much in September on the bearish end but the last couple of weeks, it's been a little bit sideways. So that's all we got for today for this video. We'll see you back next Monday as I do the Monday video. Anyway, good to be with you. And we're talking charts patterns here in terms of like a pennant formation. I'm actually doing a class coming up on December 16th on chart patterns and trading chart patterns and things like that. Anyway, have a great one. We'll see you back next week. Thank you.